Okay, so about myself. So Dave, I'm not used to talking in the third person here. So Dave is a do-it-yourself investor that invests in financial markets and real estate. I'm a lifelong student of the markets, placing my first trades in 1999 to 2000, right around that era, but really focusing on learning markets starting in late 2006 and early 2007. So I started Systematic Investors Group about 2 years ago. You can check out our site at www.systematic-investors.com with the mission to really empower retail traders and give them the practical tools to implement their own systematic trading or investing processes that are consistent so that they can be confident, profitable, and compete with the funds and bigger players out there. At Systematic Investors Group, I spend most of my time developing, backtesting, and quantifying portfolio level trading and investing strategies, as well as updating the website, which takes a crazy amount of time that you wouldn't even expect unless you have a website. You probably know how much time it takes to update all the time. But we differ from most other trading and investing services, specifically in the area of implementation. So a lot of other trading services, while they'll have newsletters and the like. We actually help traders and investors develop their own customized trading plans and then implement their strategies in a semi or fully automated way using software that integrates with their broker so that traders can execute from one to many strategies in an entire trading plan in less than 5 minutes per day. So this is the journey that I've been on. I've got right now 4 strategies running, 4 live strategies, and I literally trade, like physically trade for probably 3 minutes a day, if not less. Now, I spend most of my time, of course, looking at the markets and developing new trading ideas and doing research, but my actual implementation, my actual trading execution, it takes me, 3 minutes a day or less. Okay, so I saw a few thank yous coming in. You're absolutely welcome. I just turned off my mic for a second. Okay, let's just do another quick sound check for session number 2. Can everybody see the screen? Hear me okay? Everything's good? Okay, great. Thanks, gang. Okay, so let's jump into this then, gang. So session number 2, from soup to nuts. That's a term they use in coding and in computers. AmiBroker strategy development and auto trading. So let's get into this. This is something that's very, very, kind of, I don't want to sound corny and say near to my heart, but this is something that I spend a lot of time and energy on, and something that I'm quite passionate about. Okay, so session number 2, objectives. So the objective is I want to provide a decent starting strategy template for those that want to develop strategies using AmiBroker. And then what I want to also do is I want to review the strategy rules and backtest results of the CCI correction strategy from stockcharts.com. This was something that was sent to me by my friend Doug D. I can see Doug's on the call, Doug. So hopefully this will be a good introduction into how to develop strategies using AmiBroker and how to kind of go through the process. So and as I mentioned in the presentation, Doug is sort of like our avatar for anybody that's new to AmiBroker, that's joined the group and that wants to become more systematic in their trading. Okay, so when Doug sent this to me, I said, hey, this would be a great opportunity to share with the larger community, both AmiBroker and the systematic community. And the third item is to provide a clear path and integration case study showing how to semi and fully automate strategies using software tools that I use, which are AmiBroker and Alera Portfolio Manager. Okay, so as Jay-Z says, men lie, women lie, numbers don't. So you might recognize that guy to his right. He's a pretty good investor. So this is why AmiBroker and systematic trading is so awesome. You can come up with some simple rules. You can backtest them against historical data to see if they have an edge, because the numbers don't lie. Now that's provided you've conducted the backtesting process properly. But I mean, the essential note here is that numbers don't lie. Okay, so a little bit of background. So Doug D, as I mentioned, he's a longtime friend that I met in the technical analysis community through the CSTA organization years ago. So he's a technical analyst. He's been using various TA indicators over the years. He's now ready to take the next step and venture into what we'll call quantitative technical analysis. So this will allow him to verify and quantify some trading ideas, also to get some data on how well some of the indicators he uses work. Because one of the shortcomings I believe with technical analysis is that although, technical indicators are very useful, they're very helpful. One of the things that a lot of technical analysts aren't able to do is quantify how well the technical indicators work. So without being able to do that, you're further ahead, but you're not as far ahead as I believe you need to be. So I believe I believe technical analysts are in a unique position to kind of lead the way forward with this type of work. So Doug wants to learn how to use AmiBroker for these trading ideas. Now, Doug isn't unique. Many traders get to this stage, as I did myself, and they need some guidance in getting started. So that's what we'll do here today. He sent me an idea that is close to one of his strategy interests. Like he's been using the CCI for a while. So he sent me a strategy called the CCI correction strategy from stockcharts.com. So this will be a good case study to use. Now this will be in the notes and everything, gang, but for those that want the link, that's the link directly to the stock charts article that describes the strategy. Now I'm going to summarize the strategy as well, because we need to interpret the strategy before we can code it. So the CCI correction strategy is based on the commodity channel index, or CCI indicator, which was developed by Donald Lambert. It's a momentum oscillator that can be used to identify a new trend or warn of extreme conditions. So in this case, they're using it to indicate trending, but also you can use it as an oversold indicator as well, or overbought, oversold. So the strategy uses a weekly CCI to dictate the trading trend bias. So when it surges above 100, it gives a long trend bias on the weekly chart. When it plunges below minus 100, it gives a short trend bias. And those are the key levels noted by Lambert. So then it also uses a daily CCI. So we've got a multi-time frame analysis strategy here. It'll use the daily CCI to dictate a short-term pullback against the predominant trend. And it essentially will provide a trade trigger that represents an entry opportunity. So it'll provide sort of a trade trigger timing opportunity using the lower time frame chart, which is not uncommon with multi-time frame type of strategies. So let's kind of just go through a little bit more of the trading rules. So the first thing we do is we want to define the bigger trend in the trading bias. So the CCI surges above plus 100 on the weekly chart. That denotes an uptrend or a bullish bias, which remains until it surges below minus 100. So in other words, long trades are in play when the CCI crosses over 100 until the CCI in the weekly chart crosses below minus 100. So a CCI weekly surge below 100 will denote a downtrend or bearish bias. So you just kind of flip the logic there. So if we get the CCI on the weekly going below minus 100, that will provide a short trend bias until it goes above 100 again. So in the article, they've also noted that we can use a longer term time frame on the CCI. So instead of looking at the weekly and the daily, we can just plot a longer term CCI on the daily. So for example, you can use, let's say if you're using a 20 period CCI on the weekly, you can use a 100 period CCI to replace that on the daily chart for the trending bias. Now, this is easier from a programming perspective, and it's easier from a charting perspective, since we don't have to use, that should say, no, that's correct. So that we don't have to use time frame functions in AmiBroker. So just a quick note, I did decide to use time frame functions in AmiBroker because I'm going to be providing the script to you all, and I wanted to sort of use that as a learning opportunity as well for those that maybe don't have any experience with any with using different time frame functions in AmiBroker. So the second rule is we're going to wait for a smaller counter trend movement. So we're going to use the daily chart to time overbought pullbacks when the weekly chart dictates the bullish bias. So minus 100 on the daily chart will reflect that a pullback has actually happened within the context of the bigger uptrend. Then what we're going to do is we're going to look for a reversal of the counter trend movement. So in other words, a surge back into positive territory. So when the CCI on the daily crosses over the zero line after it's pulled back, that will be the trigger signal to enter. So that's essentially the trade trigger. Now, if this doesn't make any sense, don't worry, we're going to show you what it looks like on a chart. Okay, so the strategy when they're talking about taking profits and stops, now, from my own experience, when developing a strategy or a system, some of the most difficult considerations that will affect your profitability are when to take profits and when to cut losers. So this was one of the things that I really that really hit home with me and for me when I started developing strategies using coding, because one of the things that you'll notice if you're new to trading, when you go out into the into the trading universe, there's a lot of people that talk about how to get into stocks, but they never tell you how to get out, and that is always the most important thing. It's much easier to get into a stock than it is to actually get out for a profit. So this is directly from the article. So they say, also note that the CCI correction strategy is not meant as a standalone system. Chartists need to consider how to implement stop losses, when to take profits, and how to tailor the strategy to their own goals and trading style. So you can see even stock charts with all their experience, they don't want to tell you how to get out of these trades, right? So more aggressive traders could prefer a shorter look back period to generate quicker signals. While less aggressive traders might prefer a CCI surge above plus 100 to generate signals on the short time frame. So they're giving you some ideas. Keep in mind that this article is designed as a starting point for trading system development. Use these ideas to augment your trading style, risk reward preferences, and personal judgments. Okay, and I mean, that's pretty typical of the things you'll see out there in the trading universe. They give you trading ideas, but they don't give you the most important aspect, and that's when to get out. Okay, so now looking at taking profits and stops, this is something that I call the strategy spectrum. Our approach to determining an exit was to keep things simple. So since this is a reversion to the mean strategy, that's where it falls on the strategy spectrum. You can see there's different kinds of strategies that you can employ and that we do employ within Systematic Investors Group. This one falls within the reversion to mean type strategy. So we're buying pullbacks on oversold conditions. So we simply decided to sell when things became overbought, right? It makes sense. If you're buying something when it's oversold, then why not just sell it when it's overbought, according to the same indicator that we're using, which is the CCI indicator. So plus 100 on the daily chart of the CCI, let's get out of the trade. That's kind of what we decided to do. Okay, so we're going to do long only trading. We're not going to do any short trades for the analysis. Now, why do we do that? Well, in the real world, some stocks are hard to borrow. There's no guarantee of consistent fills when you're shorting. As well, the market also has a positive drift bias. It goes up 57% of the time. So like myself and most of the systematic traders that I know don't have many, if any, short trading strategies. That may change in the near future, but that's kind of what I do and what I've noticed other systematic traders do. Now we have ways to get out of the market or hedge, but a lot of times we don't do a lot of short trading with systems. Now, when markets get volatile, some countries or exchanges even have been known to ban short selling. So if you have a strategy that does short selling, all of a sudden they ban short selling, what do you do, right? Now, bull markets also last much longer than bear markets on average. We all know that. And, to simplify the demonstration of the presentation, let's just use the long side. much easier. Okay. Now, some preconditions. Our trading universe is going to be the NASDAQ 100 current and past. So in other words, we're going to trade the 100 stocks that comprise the NASDAQ index today and all of the stocks that comprise the NASDAQ index on the past on any given trading day. Now I use, and I know a lot of you as well use Norgate data. It is sort of the gold standard for this kind of back testing and strategy development. And their data system, their data feed handles all of the index constituent data quite easily. In this case, we're going to use a maximum portfolio size of 10 positions. And so the total capital that we're going to allocate to the strategy is going to be equal weighted 1/10 per position of the total portfolio. So for example, if we have $20,000, what we're going to do is we're going to break them into $2,000 per stock position. Okay, excuse me. So in terms of any preconditions like regime filters and ranking, so the strategy also already uses the weekly as a timing indicator, the trending bias. So we don't have any other market timing indicators in the strategy. I tried to keep the strategy as pure as the document that I read it from, and tried to just interpret it based on the rules, except obviously for the exits because they didn't provide any exits. So I didn't add anything else to the strategy. So the signals are ranked. So that was something I did add. So in the case of too many signals versus the number of slots we might have available in the portfolio, some signals are given priority over other signals based on a simple ranking algo. So the ranking algo that I chose was just the rate of change based on the close over the past 60 days. So the stocks that have been going up the most on a percentage basis over the last 60 days are going to get ranked higher. Sorry, gang, I just have to let a couple people in the room. Okay. Okay, now in terms of the implementation, the CCI correction strategy is an end of day strategy. It doesn't use live intraday market data to make decisions. All decisions are made after the market close. Execution takes place the next day. So we generate our signals, let's say at the end of today. Tomorrow, market on open, we're going to send all of our entries and exits to the market. So live orders should be in the market at least 15 minutes before the open so that it gives enough time to get matched and executed during the open auction process in the market. And opening prices that you get filled at, they should match up quite well with any kind of backtesting or charting software that you use. Okay, so we use a lot of market on open and market on close orders with systematic trading for that reason. And that's why you'll notice a lot of times, if you look at a chart, a lot of the volume comes in at the beginning and the end of the day. Okay, so all buy and sell rules wait for confirmation of the closing prices and the conditions, the closing conditions at the end of the day or at the end of the bar for execution next day. So we've got a 1-day trade delay. So this is important because this allows for really practical and realistic execution. There's no look ahead bias or difficult to execute trades. A lot of people that want to implement intraday trading strategies, a lot of times they don't realize that there are a lot of complexities with a stateful system. That's a system that's always connected to the data feed, and it's using that feedback real time in order to take trades. There's a number of technical difficulties involved in doing that. Not the least of which is technical glitches that can really get the best of you, and that can be costly. So also this ensures less of a chance of logical errors being introduced into live trading conditions. I've programmed strategies for live intraday trading before, and I can't tell you how easy it is to introduce logical errors into your trading strategies just based on something as simple as look ahead bias. It's like you're getting a signal that's early before you actually would in real time. versus your back testing. There's a lot of logical errors that are very subtle that you can create and you can build into your strategies that can be very, very costly. Okay, so here's the next steps we're going to take. We're going to start getting into the meat of the presentation then. I just wanted to be very clear on the strategy rules because I don't want the strategy rules to interrupt your thinking on the information that I'm going to present now. So we're going to review the code. We're going to demonstrate how to construct the chart for visual verification of the strategy, and then I'll explain, how the rules look on the chart. Then we're going to review the backtest briefly, and we're going to show trade examples on the charts. We're going to generate signals, and then I'm going to show you how to run the automation in Alera Portfolio Manager. Okay, so just some notes first, and then let's review the strategy backtest report. Actually, sorry, let me stop it here. I'm almost forgetting the order of my presentation here. Okay, so let's review the code, and just bear with me while I move things around a bit. Okay. Okay, so here's the code for the strategy. Now the code is there's a lot of comments in the code because I want it to, I wanted it to be clear. I probably could have cleaned the code up a little bit more before sending it out, but I think it's okay. Now there's two versions of the code. One is you can see this one is called buy, right? So this is the usually when we develop strategies at Systematic Investors Group, the buy code is what contains all of the backtesting logic, all the strategy logic for backtesting, but it also includes, I'm probably jumping ahead a little bit here, but it also includes the exploration for generating all the buy signals. So in other words, what we do is we have two strategy codes, one to generate buy signals and one to generate sell signals. So we run it as sort of a two-part process. So the buy script will contain the buy generation of signals, but also the back testing. We'll use it for the back testing and verification. The sell script will typically be mostly a copy of the buy script with some modifications for generating sell signals. So you can read through some of this information here. What I'll do is I'll just review briefly the code and what each segment does. So this include Gen Alera API signals version 3.1.7. This is a helper file which I'll give you access to. This was developed by my colleague Dan for Systematic Investors Group. Dan is a talented software engineer who helped me develop, he actually developed this script for us. So what this does is this is a helper file that we can pass some parameters to help us develop the proper structure for the data that we're going to export to Alera Portfolio Manager. That'll make sense, a lot more sense as we go through this. Okay, so our trade parameters, these are parameters that just show up. Just bear with me a second here. So they just show up here. Yes. So it allows me to just select, here's a parameter list. It allows me to select if I want next bar open or same bar close. So as I mentioned earlier, typically we're going to use next bar open. So we've got a 1 day trade delay. Okay. So that's what that little parameter list does there. And it's got a little switch case statement in order to make that work. And then we pass through the delays into our set trade delays function. Now we've got some set options here. I've commented out some of them, but I mean, this covers off on most of the things I need for a reversion trading system. I won't go through what exactly every set option is. There's an entire, 2 pages or so list of different set options you can use in AmiBroker. But just briefly, like we set our backtest mode, backtest regular raw is usually okay. Backtest regular is usually okay as well. We're going to select I've included commissions in here. So we've selected our commission mode. I think 3 stands for number of cents per share. So then the next one is our commission amount is a penny per share. So that's on each side. I don't want to allow the same bar exit, so I've just set that to false. Hold minimum bars set to 1. I've commented out some of the set options here. And then we've got, some other set options here just for position sizing, for calculating the equity bars, etc. Now this set option here, I've just kind of left here. I find this pretty useful. If you're running an optimization or something like that, what it'll do is any extra columns that it adds to the end, it'll just push them to the front of the optimization report. I just find that's a lot more useful. So I just leave that in my script. Excuse me, sorry, I'm getting a very dry throat talking tonight. Yeah, so I just leave that in my script so that it does it automatically. Round lot size set to 1. So this will make sure that you're not trading fractional shares. Now I've got a little parameter toggle here for compounding versus non-compounding. So what this basically does is if you select compounding in the strategy here, if you select compounding to yes, it's just going to do a normal portfolio level back test. Now, if you set compounding to no, then what it's going to do is essentially going to do what's called an all trades test. So what it's going to do is it's just going to use a constant dollar position sizing, and it's going to try to take every single signal that it gets. So that kind of analysis can be useful if you want to figure out things like, you don't need to know things like what is my annual return. Like if I were to trade this strategy going forward, then I would want to use a portfolio back test and set compounding to yes. Because what I want to know is, well, if I trade from this date to this date in the real world, what's it going to look like, right? What's my trading, the simulation of my trading going to look like realistically, as realistically as possible. If I set it to constant dollar size per position, then I just basically want to say, you know what, put, I'm going to use let's say $1.5 million. I'm just going to set every position size to $1,000 or $1,500. I want to make sure I have enough capital in my account to take every single trade that comes along, every single signal. I always get tongue-tied when I try to say that. Every single signal. And what I want to see is like things like, what is my expectancy? Like on average, how much do I make between my winners and losers per trade? How many trades, how many signals did it actually generate? Does it have a positive expectancy? So that it'll give you other kinds of information, not as much information as the portfolio level back test in terms of like compounded annual return, things like that, but it has other useful information. Okay. Now, I see some questions coming through. So gang, I will jump over to questions as I get a little bit further through this. So let me jump back to the code. So that's what that does. Now, what I do is, because I use Norgate and there's a lot of symbols that can be used for index constituents, what I do is I usually put in a switch here that says, do you want to use historical index constituents? And what that does is, when set to yes, it will use data in the backtest that will avoid survivorship bias. So in other words, for those that don't know, survivorship bias of this type is if I'm using, let's say, the S&P 1500 as my universe of stocks to trade. If I just use the S&P 1500 as it exists today, it's going to give me better results than if I use an index that has been modified or that has been adjusted for historical constituents of the index. So in other words, if I took a trade let's say Nortel, everybody knows Nortel. Let's say Nortel was, hypothetically, was in the S&P 1500. Well, if I'm not using a database or my list of stocks, my universe that's adjusted for historical constituents, it would have not traded Nortel back, when Nortel existed. So if I'm using an index that doesn't have that information, I'm basically saying I'm going to trade only the things that survived and assume that those things existed, let's say 10 years ago when my backtest is running. So it's very important, I believe, to use index constituents of an index, because it gives you um, a much more accurate representation of the actual trades that you would have taken. And it doesn't it basically makes your results more realistic for the simulation, much more realistic. Okay, so hopefully that makes sense. So what I do is, again, I've got a little parameter list here, and what ends up happening is if I want to select, let's say I want to trade the S&P 1500, well, um, I need to tell AmiBroker and Norgate that I'm using all of these. See, all of these current and past lists. These are all the ones that I need to use the symbols for. Excuse me, so that AmiBroker knows to use the proper functions to take advantage of those index constituents. I hope this is making sense. I'm kind of explaining in a roundabout way. So if I want to trade the S&P 1500 index constituents, I'll just choose S&P Composite 1500 current and past, and then in my code I will select S&P 1500, and that will take care of everything that I need. Now I'm trading the NASDAQ, so the symbol is NDX, and I'll just change my universe back to the NASDAQ 100, current and past. Okay. So that's just an easier way than me having to hard code it into my strategy. I just pass it through in the as a parameter toggle. I just pass it through a parameter list. Okay, now so the include ones for the Norgate. These are the functions that I need. These are all provided by Norgate to make use of the index constituents. Here's a little formula. This is the formula I use to pass through what I was just talking about. Through to the Norgate function that tells it to use index constituent time series. Okay, now I'm just initializing all of my buy and sell arrays here so that the backtest will run. Here's my ranking algorithm. So position score. What I do is I use position score setup, but the actual function is position score. So we're using the rate of change of the closing price over the last 60 days. So all of our opportunities will be ranked according to that. Now, this is the meat of the strategy here. I will explain it as best as I can without spending too much time. So we've got the CCI weekly value calculations or parameters. I use the time compress here in order to change my daily data to weekly data and calculate the CCI on the weekly. So you use a time frame compress function in AmiBroker, and then when you want to access it and put it back into an array, what you do is use a time frame expand. Okay, if it's just a single array. You don't need to use time frame restore because you're not changing the open, high, low, close, and volume data for a series of calculation. I'm only doing it on one array. Now so then we've got our trigger, we've got our CCI daily. So we have to figure out what look back period we want to use as well as we did for the weekly here. So here's the look back period. We can put it into a parameter. Parameter function is what's used in order to allow you to actually do this, right? This is a parameter. Okay. And let's see. So then we calculate the CCI value for the daily. Then what I want to do is I want to calculate my thresholds. So what are my thresholds for my weekly and my daily? As the article described, we're going to use plus and minus 100, but I want to be able to change it on the fly. So I've set those up as parameters. So I did it for the daily and the weekly long bias. So the daily long threshold and the weekly long bias, and then I've got a daily short threshold and a short weekly bias. So even though I'm not doing the short side of trading, I'm using them in the logic of my calculations to figure certain things out. It'll make more sense when you see it on a chart. Now we've got our daily exit level. So this is, where I said I want to get out when the CCI level on the daily hits 100. That's my oversold to get out. So I need to define my exit level. Now here are my buy conditions. So what I did was, it's easier for me to code this probably than to explain it. But what I did was I said, okay, I need to know how many bars since there was a cross of the CCI on the weekly above its long bias threshold and its short bias threshold. And what that allowed me to do is it allowed me to know whether the last cross was a long bias or a short bias. Because then all I have to do is all I have to say is if the weekly long bias, the days since the weekly long bias happened, are less than the number of days since the weekly short bias happened, then most likely I'm on long bias and not short bias, right? So that was an easy way to sort of figure that out. And then, so we use an immediate if, a conditional if. So we're saying if that condition is true and if the weekly is above the short threshold, above where it actually is supposed to switch, then I'm going to just give that a value of 1 to say it's true so that I can say, yes, my weekly bias is long bias and I can take trades. So that's the first step of the buy condition. And then I also need to figure out the same sort of logic for to figure out if a pullback occurred. So I use the same kind of bias, and then I want to see if there was an actual cross. So then I can say, yes, that condition is also met. So in essence, the buy condition will be when there's the weekly bias is true and a daily pullback has occurred. Okay. The weekly bias is true and a daily pullback has occurred, but the daily pullback also includes the confirmation trigger, which is the CCI crossing over the zero line. Now that'll all make more sense when I show you the actual chart. Okay. And we'll go through that. So here's all my buy conditions. We're going to buy when that's true. So the other thing I want to be true is I want to make sure that this is in an index, an historical index constituent. That's what index does. And then this is one of the NOR gate functions that will basically just get me out on the backtest if a stock has been delisted. Okay, so NOR gate data checks for that, which is very helpful. So then I'm going to buy when the buy condition is true. So the sell condition is simply going to be if my CCI daily is greater than or equal to the exit level. So if the CCI punches above plus 100 on the daily chart, I'm out. Or if it gets delisted, I want to exit out of the position, at least in the back test, right? Because this will exit out for backtesting purposes so that I know to get out, right? So if the sell condition is true, I'm going to sell. Now I use an XREM statement. This is basically, I have a hard time explaining this, but it's basically a flip-flop. So what it'll do is it'll just remove excess signals so that you don't get, like, if you're in a buy, it will only show additional buy signals when a sell has occurred. Like it'll flip-flop, right? For a better explanation, you can just read the documentation. That's kind of why I put it there, because I have a hard time explaining that concept. Now, one of the cool and useful things that I did and that I like to do for my strategies, because I'm a visual type of person, is whatever indicators I'm using in my chart, I just build them directly into the chart. So these are all, so what I do is I just set up a very simple parameter list, and I put all of my indicators in there. So for example, this indicator here, or this section of code here, will just set up a blank chart for me, right? And then the next one, this code here, which references this. So if chart type equals this in the parameter list, it will plot all of my daily CCI's information that I need in order to visually verify my strategy. And then I do the same thing for all the indicators. So I've got the weekly CCI. And then that's basically, and then I don't have to remember, oh, which chart did I use? Did I save the chart somewhere individually? It's all in my script. And I suggest that if you can, do that as well, and then everything will be contained. It's very easy to hit the ground running if you haven't looked at a strategy in a long time. Now, I'm already, upwards of 300 lines of code, but it's not as daunting as it actually looks. Once you have a template like this, you just go through each section and you modify it, right? You modify, your plots, or what belongs with which. So I also have my code for drawing my arrows on the chart. So when those conditions are true, it will draw the arrows on the charts. And this last piece of code is this is what my colleague Dan programmed for the helper function. And what this does is it just basically runs an exploration. So if status action equals action explore, so that's all that's saying is if you run an exploration, it'll return, the status will return true, that action is being taken care of, that action is in play, and it'll run this code if that action is in play, right? Anything under the if statement. So all this is basically your exploration. But what it does is it calls this gen signals function, which is the helper function I'm going to provide you with, that Dan kindly programmed for Systematic Investors Group. And what it does is it passes a number of things that your trading strategy would want to know. And it does that so that it develops out an exploration that you can just import directly into Alera Portfolio Manager. And I'll show you how that works. So this is the simplest you can get. So all we do with the buy scan is we're going to pass in the ranking. This is our position score setup. We're going to pass in the ranking so that it ranks our signals in the exploration according to the importance that we want to give to the signals based on the ranking that we talked about earlier. And then the only action I want to do is I just want to buy. So I've got a simple buy. If the condition is true for my strategy and I generate buy signals, I just want to tell Alera just to buy it. Now you can do much more complicated things with this script and with Alera Portfolio Manager, but for the sake of demonstration, I just want to show a buy. Now this will cover probably 90% of the strategies you want to develop, because generally if you have a condition that is true and you want to trade, all you really need to tell Alera to do is buy. And then in Alera Portfolio Manager, you can set it up so that it just buys market on open the next day, which is quite useful. And that's actually how I handle a lot of my trading, and how a lot of the other traders that I know handle their automated trading. And it works really, really well with very little slippage, if any. Okay, so this is the entire strategy code. Now what I'm going to do, I know I've been talking for quite a few minutes here, so let me open up the chat window and see if there's any questions. Okay, let's see. So Stephen asked, can you set the commission to a flat fee? I believe you can, Stephen. I'd have to check the software. Joseph says, does anyone in our group trade futures on a portfolio level, running strategy over multiple futures contracts groups, similar to how we trade a portfolio of stocks? Okay, gang, I don't do that. I'll let anybody in the group that does that speak up. So let's see. This appears to offer a source of diversification that may help and bear equity markets. I agree. especially since it's much easier to short futures. Absolutely. So this is kind of like, what the turtle traders did with all of their trading strategies. That's something we might get into more, Joseph, but for today, I'll kind of leave that on the side. So let's see. XREM buy sell will block multiple sequential buy signals. Yes. And it'll only restart after a buy after the next sell signal. Yes. Thank you. That is an easy way to explain it. I'll probably cut and paste that for my next presentation. Okay. So Ivor says, yes, the commission can be set to a flat fee. Graham's, thank you for that, Ivor. Thank you for those comments, gang. Graham says, for my better understanding, would XREM be needed if backtest regular instead of backtest regular raw? Yeah, so it's not contingent on what type of backtest you're using so much. Although I believe that the different levels of backtest offer one like as you go up through the different levels of backtest settings, it will remove more of the signals, but it is definitely for the signals. So you can use XREM for things other than buy and sell as well. Okay, hope that makes sense. Now, are there any questions about the actual are there any questions about the actual script, the actual strategy script? This will be, I'll provide this script for everyone. You can use it as a template for, probably 80 or 90% of the strategies that you're going to use. Obviously, it's not designed as a rotational strategy, but it will cover, things like reversion strategies and momentum type strategies, etc. Okay, so I'm going to assume I don't see any questions coming through. And Graham, your question about backtest regular and backtest regular raw. Now, I don't remember exactly which one removes some of the signals, but I mean, we can look that up and have a discussion about that offline. Joseph says, thank you. You're welcome, Joseph. Okay, so gang, this is the buy script. So what I'm going to do, let me just pull up the sell script and just show you a couple of obvious differences. I'm not going to go through all of the stuff because this is basically a copy. But what we do is we use a separate, sometimes there will be different code throughout, but not usually. But where you'll really see the difference in code is in this section of the exploration. So one of the things we do is we've added an extra line of logic here so that it will, with Norgate, what happens is if you don't use this, it will spit out a bunch of delisted symbols because Norgate might have, like for the S&P 1500, we'll have 1,500 active stocks, but in the total database, it might have 3,800 stocks total because, the difference between 3,800 and 1,500, 2,300 or so, have been delisted. So it'll spit out a bunch of sell signals that you don't need. So what we do is we pass this through here, this function, and then and what this does is it says if the signals were if it was in the index for the last 21 days, if it's greater than 0, so if it's true, it will send those sell signals in case they were missed. Okay, so that's really, I don't think it's really needed, but it's more of a bit of a protection, right? So then obviously the other thing we don't need when we generate sell signals, we don't need to rank our sell signals. We send all of our sell signals to Alera Portfolio Manager. Our buy signals, on the other hand, we want them ranked because if we don't have enough positions in our portfolio, let's say we have 20 opportunities to trade and we've got 2 open slots, we want to take the best opportunities. But when we sell, and in our sell script, we basically want to say, hey, Alera, grab all the sell signals in that universe of stocks in case I own it, because I want to get out. So the only action we're really going to send is the sell action, and this should actually say sell to close. I don't want to change this because it'll mess up my automation, but that should say, basically sell. It's just something I forgot to re-comment. Okay, gang. So that's So question, are you going to post both versions of your template? Absolutely. I'm going to give you all of this so that you can use this to modify and use for your own strategies, so that you can hit the ground running with this kind of stuff. So, okay, so I reviewed the code. Okay, so now what I want to do, I want to demonstrate how to construct a chart for visual verification. So remember in I just left it in the sell code as well. But in the buy code, which I'm going to use, we've got all of the plotting functions. So let me show you how that comes into play. So when I'm visually verifying a backtest, what I'll do is let me just create a new blank chart. So I've got a new blank chart here. And then what I'm going to do is, just so you can see, this is the strategy code I'm using, right? So what I'm going to do is I'm just going to leave enough so that I can drag it. The first thing I'm going to do is drag the strategy code over. Now what that does is it's just going to select this chart setup plot, and all the chart setup plot does is it just tells it to plot the price. Okay. So I'm just going to click OK. So now I've got my price on the chart. And then what I'm going to do is right click on that same formula, and I'm going to go insert, right? I'm going to click on insert on the pop-up, and then I'm going to select my indicators. So the first one that I want, I think I'll plot my daily CCI first. So there's my daily CCI, and I click OK. So here's my daily CCI, and in that code, in this code here, I told it to plot the CCI, to plot my levels here, overbought, oversold levels. And I'm going to do the same thing, insert, and I'm going to select the weekly CCI. So as you can see, that's really easy, right? I don't have to remember where I stored my chart. I don't have to remember anything. It's all in there. Okay. So now I've got my chart set up based on the code that I used. Let me just squelch this down a little bit. And then what I did was, it's got arrows on it as well to tell you when you've got signals. So now the next thing we're going to do is, let me just move this over here. Analysis 2, I already have the backtest code set up here. But if I didn't, I would just say, send that to the analysis. So what I want to do is, I don't want to generate signals yet. I want to run a backtest. So I'm going to set it all the way back to January the 1st, 2000 up until today. Now, this uses the the NASDAQ 100 current and past. So I've got that. Now let me just check my parameters. Now I set all the parameters in the actual code, the defaults in the code. So for example, let's see, where's there a parameter that needs to get locked in? So the daily threshold, here's the default, right? Here's the default. If you look at the function, this is where the default is stored in the function. So what I do is I've locked all of my defaults directly into the code. So usually what I'll do is, I'll just reset all, just to make sure everything is reset to the defaults. So what this is basically saying is, we're going to use compounding. So we're going to run a portfolio level backtest. We're going to use $100,000, and we're going to use 10 positions. Now, why 10? Well, maybe I optimized the strategy and figured out 10 was the optimal level to use. Maybe I just played around with the numbers, but I determined 10 was a good number, right? So now all of my settings are set. And what I'm going to do is, I'm going to go ahead and I'm going to run the backtest, and we'll just go through the backtest. We'll review the backtest briefly, and I'll show you what some of the trades actually look like. So let's run the backtest. You can see it's super fast. Now I've got a solid state drive in my computer, and lots of RAM and stuff. So if you're going to do this stuff, for those that are new to this, make sure whatever computer you're using, not that it's expensive. You can buy a solid state drive for less than a couple $100, right? Buy a good solid state drive. Make sure there's a good processor and a good amount of RAM inside your computer. Excuse me. Okay, so what I'm going to do is, let's look at some of I'm just going to double click on this so I get more of the recent dates. Here's some of the open trades, some of the trades that are open. And then here are some trades that obviously have already gone. So what I'm going to do, I'm just going to look for some trades that are winners and losers that were recent. So I'm just going to look at the percentage change, or I could just look at the profit. Let's look at the profit. So this one just opened. Let me show you what a signal that just opened looks like. So I'm just going to right click on that and say show current trade arrows. And I'm going to go back to the chart. So this is what the setup looks like, right? So let me just explain the setup again now that we have the chart active. So the last move for the CCI in the weekly chart, which is this bottom indicator, it crossed over the zero line, and this will stay on a bullish bias until it actually crosses below and confirms below this red line. Okay, this is why using confirmation visuals are really important, because you don't know if your strategy logic works otherwise. So this is on a bullish bias because the last crossover was above 100 and it hasn't crossed below 100 on the weekly in order to signify a negative bias. So it's still, this is bullish bias. Now, so then what's happened is our signal is the CCI in the daily has to go below 100, and then it has to cross over this zero line. So do you see where these arrows come in? So that happened on this bar here, this cyan or aqua a bar here, but it actually is going to buy. So this was on a closing basis, right? You don't know if this actually happens until it closes. So let's say if this were to happen, well, this happened yesterday, right? This happened yesterday, and this is today's, no, wait, I'm sorry. This is the 4th. Yeah, so this happened on the 31st. So what was the 31st? Was Thursday, right? Thursday before the long weekend. So we got the signal on Thursday. Friday was a holiday, so it executed yesterday. I actually haven't downloaded today's data yet. So it would have executed yesterday on the open. So just, for clarification, it got the signal on Thursday. Friday, the market was closed. So I think it was Joseph's question earlier, if we didn't know this was a holiday, it wouldn't matter because Alera would still get the signal from AmiBroker that would say your signals are valid from Thursday. Maybe even if it sent the signals to the market Friday, nothing would happen. Market opens Monday and it gets the signal to get into the market. So you don't have to worry about those synchronicity issues, right? So that's what happened. It bought on the open, and you can see the market just pushed up. This is probably a textbook signal, because what you want to see is you want to see that pullback, and once it hooks below 100 and then it crosses a zero line, boom, you're in the trade, right? So this is a textbook setup for this strategy. Let me just show you a couple of more winners and a couple of losers. So let's look at this one here. This was in the middle of December. Oops. Okay, so the signal happened right here, right on the cyan line, and then you can see the next day it bought on the open, and then right away it already went above the zero line within like a day. So it looks like it got in on the open and it already triggered an exit because it crossed the zero line, and then it went oversold, and then it sold the next day on the open. So that was a very short trade. Let me see if we can see a couple of more trades maybe that lasted a bit longer. Okay, this one lasted for 15 days, but it was a loser. Okay, let's look at a losing trade. Okay. So here was, so we're on a bullish bias. Here was the pullback here. Here was the crossover. You can see where the little green arrow is. It got in on the open, and you can see, it pulled back after that, and then it got out. Now I'm not using any stops. So it just waited until the next overbought signal, and it got out. Okay. So this is when it got out. Right here, right? So it got the signal here. The next day on the open, it got out. Let's look at, we'll just look at a couple more. That's another losing. I want to see like a winning trade that's been in for, several days. So just bear with me here. Oh, sorry. I'm looking at the looking at the maximum adverse excursion, not the profits. So that was 3 days. Okay, well, let's look at this one. This one was in for 5 days. Okay, it's back here. So here was your pullback, right? We're still on a bullish bias. You can see the bias changed here, but on the day of the entry and the trigger, it was actually still on a bullish bias. We had the hook, the cross below above zero. This is where you got into the trade, and then it went oversold here, and this is where you got out of the trade. So that's a fairly textbook type of trade. I'll just maybe look at one more trade. Let's look at a real bad trade. So maybe one that really just performed poorly. This one was down 25%. Okay. Okay, so here's an example. Again, we're not using any stops, so when we get in, we have to wait till it actually gets oversold to get out. So here was it was on a bullish bias. The markets rolled over. It got in on the signal, right? The signal was valid. It got in on the signal, and then it sold off, and then when it bounced, and we got a signal to get out, then it got out. So these kind of things can happen. So what I usually do is, because my experience is that using stops tend to hurt strategies quite a bit. So what I do is I use a position sizing approach instead, and I use 10 to 20 positions in order to average out and to spread risk in the account. And if I have one or two bad trades, it doesn't usually affect the strategy too badly, right? Especially if you're trading a portfolio with 20 stocks, and let's say you have a stock that gaps down 50%. Well, if let's say you've got $100,000 at play, 20 positions, and you get a 50% gap down in one, that's going to only represent 2.5% of your portfolio. So that's I use position sizing instead of using stops, because the volatility in the market is it requires you to give your positions quite a bit of room, and I found just through experience that's a better way of dealing with it than using stops, right? Because you'll see a lot of trades that have fairly wide maximum adverse excursions, but that might actually still be profitable. Like, look at this one. This one profited 14%, but it was down almost 14% before it profited out, right? So if you use really tight stops, you're just going to get death by 1,000 cuts. Okay, so at this point, what I'm going to do, let me just look at a couple of questions if there's any that have rolled through, and then I will continue on. Let's see. So the question is, okay, yes, I'm going to post versions of the template. I think I said that, both versions. Do you generally use separate code files, each for sell and buy signals? Yes, absolutely. I use one script for my buy signals and one script for my sell signals. And that's really a function of the way the explorations work, because it's just cleaner. It's cleaner from an organizational standpoint. And when you want to run your exploration signals, it is just easier to manage. So yes, it is mostly because of the exploration report, but from an organizational standpoint, it is helpful. Okay, I don't see any other questions. Okay, so yes, let's look at the backtest stats. Okay, so the backtest stats, you can see the strategy. It has an annual average return of almost 9%, a maximum drawdown of 51%, and a CAR MDD of 0.17. So you've got 67% winners and 32% losers. So let's just take a look at the report. Okay, so we started with 100,000. Over the last 20 years, we made about $500,000. The exposure, it's in the market about 61% of the time. So about 39% of the time it's out of the market. Our annual return, 9%. Our risk-adjusted return, based on the amount of time that we're actually in the market, is about 15%. So it's not bad. We had commissions here. So this also takes into account commissions of $88,000, almost $89,000. So that's good to know. We had almost 7,000 trades. If you look at this is our expectancy, our average profit divided by our average loss. So you can expect to make on average between your winners and your losers about 0.3% per trade, right? And so what that means is 68% of the time you're going to win. You're going to make about 2.35% on average. You're going to be, your average bars held is 4, so it's fairly short. And if you look at your losers, about 32% of the time you lose, but you lose 4%, right? So your payoff ratio is going to be below 1 because you lose more money than you win, right? So you can see here your payoff ratio is about 0.65. Now, because this strategy wins more than it loses, that's absolutely fine. Now, let's see. So I want to look at the maximum consecutive losses. So what I was saying about position sizing before, we had 13 throughout this back test and over the last 20 years, we had 13 maximum, 13 losses in a row. So this is why you also want to position size accordingly in case you hit a string of losses. There's a concept called risk of ruin, which, you know, you can blow out from adverse events, but you can also blow out your account if your position size is too large and you hit a string of losses. Doesn't mean your strategy doesn't work, just means that your position size was too high to account for the fact that once in a while you're going to have a bad run, right? Just like in cards, you're going to have a string of a bad run, a string of losses. So here's the basic stats. Now we have our maximum drawdown is 51%. That's a lot higher than I would personally want to tolerate. And I think, you know, just from my experience and what I've read and working with other traders, I don't think most traders can really in the real world stomach a maximum drawdown of more than about maybe about 20%. Sorry, gang, I just have to let my dog out here. He's bored now. Okay, so just getting back to the back test. So if you look at our maximum drawdowns a little bit higher than I think most people could tolerate. And that also brings our CAR MDD down to 0.17, right? So your CAR MDD is your annual average return here divided by your maximum drawdown. I usually like to see a strategy that has a CAR MDD of at least 0.5 as a starting point. Now, I'm pretty certain if we use some regime filters and some macro filters, we could probably cut back on some of these drawdowns. Let's look at what the charts look like. So here's a linear chart. Here's what a linear chart looks like. It actually looks pretty good, right? I mean, we've had some good results over the last bull run. Here's what a log scale chart looks like. So the log scale adjusts for compounding, and it just shows the percentage change basis of the chart. So you can see we had a really drastic drawdown here and here, which would be expected, right? 2008 global financial crisis, .com bust, exactly where you would expect them. So if you look at like where the adverse events were, you know, right at the .com era and right at the global financial crisis, but since like 2010, let's say, or probably the 2009 recovery, it looks like we had a maximum drawdown of under 20%, right? So that is, you know, you've got average drawdowns of, you know, between 10 and 15%. That's actually pretty good. If you look at the profit table, you can see, look at last year was up 50%. That's actually really good. We like a lot of strategies were up really well last year. Last year was a good year. Excuse me. But even 2019, 36%, that's pretty good. 2018 was disappointing. 2017 was pretty good. 2016, not bad. You know, so on average, this looks pretty decent, right? 2014 and 2015. So if you were trading between those 2 years, you would have said, oh, this strategy sucks and I don't want to trade this anymore, most likely, right? So that's why it's important to look, you know, over a long period of time to see, you know, how would this strategy have realistically performed during different market conditions? And what does, you know, what do the years look like? Is there a lot of red in my ledger here? Do I have a lot of red years? Are the years really up and down? Is there a lot of volatility between the returns? Now, because we don't have macro filters, you can see certain years you expect that. But since 2009, it's been fairly stable, but you've had a couple of flat years as well, right? So it's not too bad. I mean, as a starting strategy, I would probably, if this was my first strategy, I would probably see if I could improve it, right? Um, it definitely it definitely works with the concept of how markets work. You know that strategy spectrum I showed you before, reversion to the mean is the first strategy on there. It is basically a reversion to the mean strategy. So so that's kind of a quick overview of the back test. Does anybody have any questions about the back test? I'll just give it a minute while I take a quick sip of water here. Okay, so does this strategy get one in near the end of a trading day, or the entry signal is anytime during the day? Okay, so what I usually do is I generate signals at the end of today. So let's say we ran the signals, which I'll show you in a little bit. We ran the signals tonight, or actually it would probably be tomorrow morning before the market opens, but based on the close of today, right? And then I would send an order through Alera Portfolio Manager, which I'll show you, as a market on open order. So it will execute right on the market open during the opening auction process. So typically, if you look at a chart, so if we get into the market, let's say tomorrow, and we'll just kind of make an assumption. Let's say this was tomorrow. Let me go to the last day. Let's assume this is tomorrow morning, this bar. So if you look at this bar here, the most recent bar on the chart, the open is 113.75. So if we get a signal here on the day before and we execute the next day on the open, you're going to get executed very close to the open price of 113.75 if you put your order in at least 15 minutes before the market open and you set it as a market on open order. If you're not aware of what the market auction process is, the opening market auction process and the closing market auction process, just Google it and it'll explain to you how that process works. Okay, so let's see. Would this change a lot if you optimize? Sorry, my brain's a little bit slow. CCing signals. What is, oh, CCI, sorry. Would this change a lot if you optimized the CCI signals? Yes, it would change. I can actually show you some changes. So what I actually did, the article recommended like let's say a 20-week or a 26-week weekly CCI and a 20 or a 26-week daily CCI. So I got better results actually by using just, a 20 or a 26 period weekly, but using a 5 period daily CCI, which this is. So the 5 period daily CCI is going to give you more opportunities, but it's going to catch those quicker pullbacks. So you can see, like, look at all the pullbacks on the chart. It's just going to catch these quicker pullbacks. And I just know from experience in developing lots and lots of trading strategies that the shorter term oscillators tend to get you better better entries generally for this type of short to midterm trading, basically swing trading. If you want to swing trade, using a shorter term oscillator to time your entries is generally a better approach. And I just know that through experience. So for me, when I was doing this, it was very easy for me to say, oh yeah, you know what? The results don't look that great using a 20 period on the daily. Let me go to a 5 period CCI and see what that looks like. And that helped the results quite a bit. So I hope that answers your question, Stephen. Wayne says a good regime filter, and this starts to get interesting. Absolutely, Wayne. Absolutely. On your weekly plot, changing the color to represent bullish and bearish conditions make it easier to read. Absolutely. So yeah, this is all contained in this code here. At the end of my plot, this chart setup code, starting with chart type, And, there's the instructions on how to kind of read that. And I put that all into this code here, including the colors and everything else, because I just find it's very useful. Okay, gang. So if there's no other questions, let me continue on. So let me just refer to my notes here. So we reviewed the back test briefly and we showed some trade examples. So now what we're going to do, I think that's fairly clear, right? We went through the code. Let's just do a quick recap. We went through the code. We determined that we need one code for the buy logic in the back test, and one for the sell logic. The sell logic is essentially going to be a copy of the same strategy. The only difference mostly being a couple of changes in the first couple of lines of code of this sell exploration. So when we want to generate our signals, this is essentially the code that's generating the signals. And actually, this is something I like about AmiBroker. I've used some other scripting languages. AmiBroker allows you to put everything into one script, and logically separate it so you can follow it. So for example, like there's all our explorations, all of our plotting functions are up here, all of our strategy logic is up here, etc. It makes it very simple to keep everything sort of organized in one script. I've used like Easy Language, TradeStation before. So it uses a scripting language called Easy Language. And a lot of times, like I had to have separate scripts in order to just paint the bars a different color, and a separate script to do a different function. And I don't know if it's changed since I've used it, but I just find that AmiBroker is I just like it much better. Once I learned how to use it, I actually liked it a lot better. Okay, so now what we're going to do is we're going to generate the signals. So all I've done here is I've sent the buy script. I'll just do it again so you can see it, to the analysis window, right? So you can see this is the path of the file. That's the name of the file. So what I'm going to do then is I'll just make sure I've got the right universe of stocks. NASDAQ 100, current and past. Yes, that's what I want. When I generate signals, I only want to generate either one recent bar or one recent day. They'll both do the same thing. So this will just pick up whatever's in my database and is the most recent bar. Just bear with me a second, gang. Okay. Sorry, something flipped on my other screen and I thought I got kicked out of the meeting. We've been having internet problems here all day, so luckily that has not happened. Okay. So where was I? So essentially all I'm doing is saying I want to generate a signal for the last recent bar, so the dates don't matter anymore. And let me just make sure that I've got all of my settings, my parameter settings locked in. So now basically all I'm going to do is I'm going to just run an exploration. It's as simple as that. Now, unfortunately, gang, we have no buy signals today. So I'm going to have to show you on a separate strategy what the buy signals look like. But some days you're just not going to get any signals. So let's just do the same thing for the sell signals. I'm going to send that to the analysis window. We're going to use the same universe and the same settings. Let me just make sure they're all locked in. And let's generate the sell signals. So you can see here, we've got sell signals. Now, what we do in order to keep strategies in sync, we trade a specific universe. So in this instance, we're trading a list of stocks, the NASDAQ 100. So it doesn't matter when you start trading. We're going to generate the sell signals for anything that might have a recent sell signal in that universe. And the reason why we do that is because if, let's say, I start trading this strategy today, and let's say Doug was trading this strategy, has been trading it for 6 months, and let's say I don't have any of these ticker symbols in my current portfolio, but Doug does, he's going to get the sell signals for that. So the way that we develop strategies and the way we distribute strategies to our community and whether we're trading them locally or we also share our strategies with our community, the signals, their strategies will stay in sync regardless, because those signals will generate, if you're in a trade and you've been trading the strategy for a year, or you just started last week, one of these will likely be in your portfolio. It'll get sold. If it's not in your portfolio, that's fine, because Alera Portfolio Manager will just ignore it. When it encounters it, it'll say, hey, you need to sell Xilinx, but I don't have it in my portfolio, so I'm just going to ignore it. And that's absolutely fine. So we build in that sort of redundancy so that everything stays in sync. This is what's known as really a stateless system. It's not like these types of strategies where you're connected to a live data feed and you're taking signals as they come. And if you get out of sync, oh my God, what do I do? How do I manage my portfolio? What's open? What's not open? Did I get the sell signal? Did I miss it? This type of end of day trading is very comfortable. I like it because you actually have more opportunity to make money, because you get larger moves, as long as you position size in order to control your risk better. But you get larger multi-day moves, but it's also less stressful, okay, for the most part, especially from an execution standpoint. So this is, we've just created a very simple scan here, and all we're doing is we're telling it, just what do we need to sell based on the sell rules? What do we need to buy based on the buy rules? Okay, so that's essentially how we generate signals. Now, what I'll do is afterwards, I'll show you, when we get into the Alera portion of this, which is coming up next, I will show you some other strategies that probably have buy signals today that are what I'll call local strategies. And I differentiate local strategies between, maybe online strategies, because we offer through Systematic Investors Group a way that you can grab these signals using Alera Portfolio Manager directly from our website. Okay, and I'll show you briefly how that works again. So let me just check. I'm going to see if there's any questions before I get into the Alera section. Let's see here. So Wayne says, there's one before that. Okay, so let's see. Can Alera use dynamic position sizing based on ATR instead of a fixed proportion? Yes, that would all come from your AmiBroker strategy. You would just pass your position sizing through from Alera through from AmiBroker directly to Alera. And there's different ways you can do that. If you look at the documentation, you can see there's several ways to do that. You can do it based on a percentage of your portfolio. You can pass it through to just say, hey, I've calculated the ATR and I know I want to buy this many shares, and you send it through. What I do with Alera is I just do, like and myself and other systematic traders I've had this conversation with, including Alan Clement, as a matter of fact. I remember that conversation with him specifically. Basically, we have no proof to suggest that using anything other than equal weighting your positions. So in other words, if I want to trade 10 positions using $10,000, just equal weight it $1,000 each. We have no evidence to suggest in any of the work that we've done that there's actually a better way to do it. Like if you look at the complexity that it adds, it doesn't really add any extra value. So as a matter of course, I equal weight all of my positions. I keep it super simple because I just don't think, I don't have any evidence to suggest there's a better way to do it. Okay. And that's just my opinion. And that's the opinion of other systematic traders that I've had that conversation with. Okay. So, and that's why we do it that way. But yes, you can if you want to. So using section begin and section end on your parameters allows you to hide section on the parameter window if you have a lot of parameters to deal with. Yeah. So the reason why I use it, Wayne, specifically is because I like to organize things by headings as well. So for example, this is one section called historical index constituents, one section called position sizing. It just allows you to organize things better. Otherwise, if I don't use any of those sections, everything just shows up under main, right? Now I set the chart plots under main because that is how it, works. I didn't use a section for that. In fact, you can see I commented it out, right? Here's the section end for the chart plots, and here's the section begin because I want it under the just the main heading. Okay, so another question. So when a buy or sell signal is generated, is the trade executed at the time or is an alert sent? No, it's actually sent to the market, and I'll show you what that looks like in the next section. Let's see, Van Tharp pushes that non-fixed percentage approach. Van Tharp pushes that non-fixed percentage approach. Okay, I think he does that more as a risk reward, from a risk reward perspective, because I've looked at his approach when he uses I'm going to risk 1R to make 4R, and I'm going to position size according to that. I mean that's quite valid with this type of trading. What I found is that adding that complexity doesn't add any value. In fact, it'll probably drive you crazy trying to code it. And that's just, when you're a systematic trader or investor, you can choose to do what works for you. And I just say, just do you, just don't hurt anyone, right? Not that you're going to hurt anyone with your systematic trading, but that's generally what I found just works for me. Does AmiBroker Exploration output format the Alera signal file? Yes. So what I was saying earlier is this is what we're going to get into now. When we generated the signals, so what we're doing here is we're actually calling the gen signals function. So gen signals is related to this include file here, which is the helper file, this gen Alera API signals. If you look in my actual AmiBroker, and I'm going to provide this file for you guys. Hang on, let me just clear that. If you look in my include file, here it is. Here's my include file. So gen Alera API signals is the function for that gen signals is actually included in this helper file. And what this does is it passes all the information to the function, and this function basically creates a dynamic list. Like sometimes it'll look like this, right? So sometimes your exploration will look something like this. So you can say, okay, here's your symbol, here's your date time, here's your rank for your buy signals. The higher rank will get will have priority. My action is buy to open, right? Because you can send a number of different actions to Alera Portfolio Manager. You can tell it the quantity, number of shares at a limit price of this limit price, time enforced good for day, time enforced good till cancel. There's all kinds of things you can do. But in order to keep this presentation very high level and simple, all I did was send buy and sell signals, simple buy and sell signals. And then I can tell Alera just to buy the next day on open. Now you have the flexibility to do almost anything you want. So if you have a specific use case example, what I'd suggest is just email myself about that use case example, or I can put you in touch with Alex from Alera Trading, and he can help you with specific implementations, okay? But in order to keep this presentation high level, I'm just using the very base functionality. But yes, so this is basically what happens. So just to be clear, in our buy and sell file, we call gen signals in the exploration, and we pass a bunch of values to gen signals, which basically uses this function to create and output the proper exploration format that can be exported so that Alera Portfolio Manager can easily just pick it up and read it. Now, since we're on that, this is a perfect segue into explaining how that works. So the next thing we'll do is I'm going to show you how to run the automation in Alera Portfolio Manager. So And I might have skipped a few things. So let me just jump back to my slideshow. Okay, and make sure we didn't miss anything. Okay, so we talked about all the backtesting assumptions for backtesting. I talked a little bit about the portfolio approach. What I'm going to do is I'm going to include this in the notes. You can read through this. And this is just a kind of a slide that describes why I sort of like the portfolio approach and why I do portfolio trading. Okay, so you can read this. This will be in the notes, which I'll attach to the meeting recording. Here's some of the key backtest metrics that I like to look at. The highlighted ones are ones that when I'm first looking at a strategy, these are, this is kind of where my eye gravitates to the most. And I especially look at the CAR MDD, which is also called the MAR ratio. It's what I call my objective function, in the words of Dr. Howard Bandy. That is my subjective measure of a metric that's important to me. So your objective function is something that's it's subjective to you, but it's something that's important, okay, to you, a metric. So like for me, the CAR MDD or the MAR ratio is my objective function. That's what I optimize for. That's what I'm generally looking for, as high as I can get. Because what that means is if you've got, good returns with less drawdown, and that's essentially what I'm trying to achieve with my trading. Good returns, highest possible returns, lowest possible drawdown. Okay, so we reviewed the backtest report. Okay, so let me just go back and kind of re-review this because I jumped ahead. So this is the process of generating the signals, right? So I'm just going to recap this again because we've got a visual. So what happens is we've got, as I said, our sell script and we've got our buy script. That's where we start from, right? Then what we're going to do is, so the sell script is the same as the buy script AFL with some modifications, which I described. Now, then what we're going to do is we're going to create an APX file for both the sell and for the buy. Okay, so the APX file, which is also called a project file, all that really does is lock in your settings. And I'll show you quickly what that looks like. So for example, when we went here and we wanted to generate our signals, what you can do is you can say, okay, I want to make sure I have this set to the NASDAQ 100. I've got one recent bar set. I've got my strategy settings set. And all you do is you save this. And when you save this, right? So I just go save as, and it's going to save it as an analysis project. And the reason why I want that is because I don't want to have to come in every time and in the next step, which we'll get to. But in the next step, I don't want to have to come in every time and make sure I've got my settings all set up. Do I have the right universe set? Do I have the right parameters set? I don't want anything to move. I want it to be consistent. So that's what the analysis project file is used for. You can just set that up. So the other way that you can do this is you can just say, like, if I don't want to have to find what file I'm using, if I don't want to have to find what file I'm using and everything else, I can just say, hey, you know what? Let me open up my buy CCI APX file. And when I open that up, it'll pick the strategy file that I'm using. It'll make sure that it has the universe or the watch list that I want, how many, it locks all of these things in. So that's the purpose of the APX project file. Okay, it just locks all of those things in. So we need one for the buy side and one for the sell side. Okay, so that explains that. And then the next thing we're going to do is we're going to create an AmiBroker batch file. So all of these things kind of drive into each other, right? So we've got our buy sell script. We've got our settings all set for everything that we want for those signals to generate with our APX file. And then the next thing is we've got our AmiBroker batch file. So the AmiBroker batch file, what that does is it allows us to run some automations in AmiBroker, right? And I'll show you what that looks like. So if you look at it, like I've got a folder here that has a CCI correction from stock charts. I've got these 5 files in one folder. So here's my buy script, here's my sell script, here's my my buy APX file, my sell APX file. All these numbers correspond. Unfortunately, I couldn't order these the same as these. I apologize. And then the next thing is an ABB file, right? .abb denotes an AmiBroker batch file, right? ABB file. So the APX is the project file. The ABB is your batch file. So I'll show you what that looks like, but just to follow the process through, once we have our batch file, basically what our batch file does is it runs the operations that you would need to run to basically open up your each of your scripts, generate load your APX files, generate your explorations, and then export the files to a text file, which we need for Alera Portfolio Manager to pick up. So that's basically how the process works. So the next process is we're going to create our batch file, and then we're going to output our two explorations as a CSV file, but we're going to give it an extension .sig. Now I'll show you why that's important. It's just something that Alera, it's a convention that Alera Portfolio Manager uses. Okay, so this is the process here. Now, okay, so let me go through this as well. So I've got everything documented so that not only can you look at the video, but you can also read the sort of the show notes after, right? So here's the cell script. I show you the kind of things that are different, as I mentioned, where the modifications are in those lines. Then here's the APX project files that we just talked about. So the APX project files are just the project files that store reference of the AFL file here, right? The filter settings here, the range here, time if you need it here. We're not going to use it because we're using one recent bar, and the strategy parameter defaults, which are in this little soundboard. So all of our strategy parameter defaults, that's all contained in the APX file. Now here's what our AmiBroker batch file looks like. So we can create an AmiBroker batch file, and what this does is the batch file has actions and it has parameters. So basically what we're going to do is, this is usually how I set up my batch files. The first thing I tell it to do is I tell it to load the database that I want to use. Now, the reason why I do this is because when I set up when I set this up to work in Alera Portfolio Manager, I keep AmiBroker closed all the time. So when AmiBroker or when Alera Portfolio Manager calls AmiBroker to run the batch file, which is basically what it does to generate the signals, it will open it up, and then it will tell it to load the database, which this load database action does using this parameter, right? This is the NOR-gate. This is where my NOR-gate database is. Then what it's going to do is it's going to run a NOR-gate. I run a NOR-gate function. Now, if you're not using NOR-gate, you wouldn't use this in your batch file, which is fine. So data plugin command, I'm going to tell NOR-gate database maintenance if required. Now, what this means is, if you look at AmiBroker, or if you look at NOR-gate, what I'm going to do here is we've probably got the data for the end of the day, and it hasn't set to run yet. It's probably going to run like at 1 in the morning or something, right? Oh, here it is. Next update due in 8 hours. So it's going to run at 6 a.m. tomorrow. But we've probably got the data. So if I go ahead and I run NOR-gate, right? If you look here, this says okay. This is my NOR-gate database maintenance for the database. It's okay, right? But if I go ahead and I run and I update the database, which I'm going to do right now, just take a quick drink while it's doing this. Geez, I hope this doesn't take like 5 minutes, gang. Maybe what I'll do, let me just jump ahead and come back to this. Okay. Let's see, where was I? Okay, so we'll come back to this in a second. But basically what's going to happen is if we update our NOR-gate database, AmiBroker's database needs to be updated as well. So if it detects that the data was updated, but AmiBroker's database was not, it's going to automatically do that. So that's what this function does. Then what it's going to do is it's going to load the project file that we talked about. So I usually run my cell signals first. So all this is going to do is the equivalent. See where it says load project? it's going to do the equivalent of this. It's going to say, okay, come over here and open my cell CCI APX file. Boom. So that's what the batch file is done in that command right there. And then, okay, so let me show you, NOR-gate is finished updating. So let me just jump back before I jump forward again. So do you see now it says the database needs maintenance? This went from okay to maintenance. We're going to leave it like that because when we run our signal, you're going to see the batch file is going to update this automatically, okay? So then what I'm going to do is, let me just jump back to this. So then it's going to run the exploration for the cell signal. Then what it's going to do is it's going to export it to a CSV file, but I've told it to export it using this name .sig. .sig is a format that Alera Portfolio Manager will recognize. If I save it as .csv, it won't do anything. But if I save it as .sig, Alera Portfolio Manager will recognize that and process it. So I can actually generate multiple files, which I'm going to do, right? So there's a cell one. I basically do the same thing. I load the APX file for the buy side. I run an exploration. Then I'm going to export it to buy.cci.sig. So I've got two .sig files, and Alera Portfolio Manager will be smart enough to pick them both up and know what to do with them. Excuse me. So the batch file has a sequence of actions to perform all the functions needed in order to load the database, update the database, load both the buy and sell project files, run an exploration on each project file, and then save and output the resulting SIG file. Now, you don't have to remember all this. All you do is you have one of these files, you use it as a template, and you just go in, you make a copy of it, and you just modify all of these file paths, okay? So it looks more complicated than it actually is. The SIG file is a text file in CSV format. It contains a list of stocks to buy and sell. Two separate files are created, a buy and a SIG. Each SIG is created or saved in the Alera Portfolio Manager folder designated for that strategy. So the folder path is created when a new strat is created in Alera Portfolio Manager. Okay, so let's review exactly what this looks like. So we'll review the folder where all the files are, including the AFL scripts for buy sell. We're going to open and review both the APX files, which we actually did, and then we'll open and review the batch file. So let me show you quickly what this just looks like. So I have a folder here, and in this folder is these four files, right? So here's my buy script, my sell script, and my batch file, and my APX files. So let me just show you again quickly what this looks like. So I'm going to open up my, I'll only open up my buy. You don't need to see the sell because we kind of already did this. And like I said, this just locks in all your settings. So there's my APX file. Now I'm going to go ahead and open up my batch file just to show you what that looks like. So here's my batch file. It's simply an ABB file with all of the things I just showed you, right? And it'll run through these functions. So once I have all of these files, I'm basically ready to roll. I've got everything that I need in order to set this up using Alera Portfolio Manager. So let me just, I'm just going to close this stuff. Now, the only thing we're actually going to reference in Alera Portfolio Manager, let me actually load Alera Portfolio Manager. Okay, so it's just on my other screen. Let me just give me 1 second, gang. So what I'm going to do is I'm going to open up, here's Alera Portfolio Manager. I've already got a, this is my production account. AmiBroker is the one that I do a lot of paper testing in. So we're just going to open up that one. So I've gone ahead and I've opened up that workspace for Alera Portfolio Manager. And then what I need to do is I also need to connect it to IB Gateway. So I'm just going to double click on the IB Gateway here. And I've got IB Gateway here, and I'm just going to log into my paper trading account quickly. Okay. Okay, so now I've got I've got Alera Portfolio Manager running, and I've got um, IB Gateway running, right? So, so now basically, is it hanging? It doesn't look like it's connected. Not sure why. Okay. Gang, I'm not sure why this is, of course it's going to do this while we're live, right? Well, let me see if I can connect. Yeah, okay. That's not good. Let me try to reload it. Okay. Let's see. So let me just log in again. Hopefully this will load. It would be a shame if we get to this point and then we can't connect to IB Gateway. So it's having some kind of problem authenticating. I'm not quite sure why. This is a problem on IB's end. So, okay, gang. So just do me a favor, gang. Can you just let me know that you can all just see and hear me okay? Still. Okay. So my internet, because we've been having a lot of internet problems in our area today. So I don't think this is an internet problem. I think this is an IB problem. Okay, good. Oh, thank God. Okay, we're connected to IB now. So all I need to do is just tell Alera Portfolio Manager to connect to IB Gateway. I just click the start button. This bar will change from red to blue. Now it's running. Okay, now I'm going to go to my strategies, and you can see here, this is a little bit squashed because I've got all of these strategies that I'm running in paper mode. So what I did yesterday is I just quickly set up another strategy, which I can do just by hitting the plus sign, and I can just set up another strategy. But I set up one called Stock Chart CCI. So that's this one here. See, like we can switch between all these different strategies, and they can have different settings, right? So some of these strategies, like the stock chart CCI one, are going to run locally and generate signals from AmiBroker. Some of them, like these ones that have GD in front of them, some of these strategies actually pull signals directly from the Systematic Investors Group website. So we've got like I think it's 9 strategies running right now that we can pull from our website. Okay. But I'll show you that a little bit later. I don't want to get off topic. So what we've got here is we've got the stock chart strategy. So all I've done is I've come in here, I've given it a name, I've given it a strategy priority, which is just a number that tells it if you want to give it priority other strategies. If this number's higher, it will grab ticker symbols that other strategies are using. If I want them to belong to this strategy, if I set them all the same, it will just, it'll just say, hey, that strategy, that another strategy owns this ticker symbol. I know you've got a signal for it, but I need to ignore it. Okay, so then I'm telling it to trade US stocks. I'm using a setting here called File Screener, which is a setting we use for simple buy and sell signals. And it uses something called the dual screener setting. Now, other strategies have different settings. This is just how this strategy is set up. I've told it I want to maintain a number of 10 positions. So I can send as many signals to this as I want. Alera Portfolio Manager will be smart enough to deal with it. I'm going to run CSV files. Now, where the automation end comes in, well, let me just finish with the setup. So this, usually when you set up a new strategy, you just go through and set this up. It's actually quite easy. And then what I'm going to tell it is I want to run in my total account, I only want to run 10% for this strategy. Because the whole idea here, gang, is you want to be able to run multiple strategies. So, for diversification and for diverse opportunities as well. So I'm only going to run, let's say, 10% for this strategy. And because I'm running 10 positions, I'm going to run 10% per position. So what this means is of the 10% I'm running, each strategy is going to take 1/10 of that allocation. Now, normally what I'm going to do is, because I'm using only simple buy and sell signals. You know, I could, if I wanted to, send market on open orders through my strategy. But what I'm going to do is, because I'm keeping it simple, and for 9 out of 10 strategies you can do this, I'm just going to tell it to use market on open orders, and I'm going to override. So it's going to get all of those signals, and they're all just going to be market on open orders. Now, because we're using a paper trading account, and interactive brokers will basically reject market on open orders in aftermarket conditions, I'm just gonna override these to market for the time being. But in production, what I would do is I would either run the market on open or market on close. I tend to like market on open orders, so that's what I would do. For the sake of the demo, we'll just use market orders. Now, if you want this to, you can tell it to send you an email after each strategy runs. If you want, you can tell it to, you know, you can override your strategy and have Alera manage your stop losses based on just a straight stop, or using a trailing stop. You can do that directly using Alera Portfolio Manager to manage that live. And you can generate target orders as well. So if you want to say, okay, I'm going to buy something and I just want to target out at 10%, you can do that as well. I tend to let my strategy do all the work. So all of the things that I set up in Alera are just the basic things to run the strategy, and all of the stop orders, everything gets generated through my signals typically. Okay, so I just set up my limits for the amount of money I want to trade. And there's some other things here that we, you know, for the sake of this, we don't need to cover. So what I'm going to do is I've saved my strategy. Now my strategy is set up. Now, the way Alera Portfolio Manager works, it uses basically 2 automations within the program. So the first automation is use external program. Think of that as generate my signals. Okay. So what this does is this little block of area in Alera Portfolio Manager, when I set it, will actually call AmiBroker, or if I'm using Python, it'll call Python. It'll call whatever I want it to call, and it'll force it to generate my signals. So that's what this first section is for. If you're generating signals, let's say from our website, you can just turn this off. But when you're generating local signals, you need a way for it to know where to get the signals from. And that's essentially what this functionality is for. This second functionality is basically, it just tells Alera to run the strategy. Now you can run it manually or semi-automatically by just pressing this button, or you can just say, I want to run it on autopilot. You click that little button there, and it'll run the strategy at 10 after 9. So it's a little bit, this is a little bit cryptic, but that's the time string. And if you just hover over run strategy, it'll tell you that it's enabled at 9:10 a.m. every single morning. So like I said, I'm using market on open orders. I'm going to run this strategy 20 minutes before the market opens and get my orders into the market in the morning. If I fall asleep and I don't wake up, it'll just do this while I'm asleep. Okay. If I want to come in here and run this manually or semi-automatically, you know, I would just do that, and I would just run it that way. So let me explain like what these do. So this first one that says file path, what this does is it's going to open up AmiBroker. And then this second argument here that says run batch and then has a file path, this is actually going to run my batch file. So this is a reference to the batch file that I showed you. And then what it's going to do is it's got a little switch at the end that says /exit. So it's going to open the program. It's going to run the batch file that I just showed you, and then it's going to exit the program. Now, I've got the batch file set up. Do you see when I create a strategy, I've got the batch file set up to drop those text files that it creates directly into this folder that is designated for this strategy. So if I just click on this little button here, and then I open up my a new Explorer window, and I just put this in the path here, I'm just going to paste it here. This is where it's going to drop my SIG files. So you see when I run my strategy, it creates a buy sig file and a sell sig file. And if I open up this file, you can see I don't have any buy signals for today, but I have sell signals. Okay, so let me show you what this looks like in real time. Now that you know how this works. Okay, now this has a timer as well. So typically what will happen is if I'm running this, I'll tell it to generate my signals automatically every day at 9 a.m. And then I'll tell it to run my strategy signals to put them in the market at 10 after 9. So this is a two-step process. First, we generate our signals, and then we actually execute our signals. Okay, so let me show you actually what this looks like. Now, what I'm going to do is I'm going to close AmiBroker because I usually keep AmiBroker closed. And I'm just going to pretend that, this is on a timer and I'm running it. So the first thing I'm going to do, I'm going to run external program now. This just means generate my signals, right? So it's opening up AmiBroker automatically, opens up AmiBroker. It's running the maintenance on the database. So it updated the database. That's what I was going to show you later. Generating all the sell signals, generating the buy signals. I think I saw a couple buy signals there actually. Maybe we have a few buy signals because we updated the data to today. And let me just go over to where the files are generated. Let me just do that again. I'm going to copy that folder and let me just go and just so I mean, you don't need to do this, but if you want to just see what was generated. So, okay, good. We have two buy signals. So tomorrow morning, we want to buy team and we want to buy MRVL. And then we want to sell, if any of these are in our portfolio, we want to sell these. Okay, so that's basically, those are our signals. And then what Alera Portfolio Manager is going to do is if we want to run this, if I want to see what it's going to buy and sell, I'm just going to click on order preview. It's going to pick up those files and it's going to show me. Now it's position size for me automatically. So what it's going to do is it's going to say, okay, the first thing I want to do is I want to buy 15 shares of team. The order type is market, right? Because I changed it, and my time in force is day. So if this goes into the market and it doesn't get filled, the broker will clear it out at the end of the day, right? Because it's a day order, it's not a good till cancel. Then it's going to try to buy 236 shares of MRVL, right? And the reason why it's going to do that is because I told Alera Portfolio Manager to just manage my position sizing, right? So it figures out how much I've got in my account, how much I've allocated, and how many shares I can buy with 10% of that allocation, which is $11,238, and it's going to round the shares down. Okay, so if let's say I want to run this semi-automatically, I can look at the signals that are generated every day. I can click on that to show me what a chart's going to look like, and I can say, yeah, you know what, I like that chart. I'm going to trade it, so I don't need to do anything. Oops, sorry, gang. So let's say I want to see what this chart looks like. Yeah, maybe I don't want to trade that one. Maybe I don't like the chart. I mean, I really do. But let's assume I don't like the chart. Well, I can just skip that order and I can just update the skip order list. And that, so that'll get into the skip order list and you'll see it here. It'll skip that order. And when I run this strategy, it will actually not run MRVL. Now, if I just want to let it take every signal and I don't want to have any discretion over what I'm trading, go back to order preview. And I'm going to unskip it, update it, and it gets removed from the skip order list. Now, the important thing to know is once it's in the skip order list, it's going to stay in the skip order list, until you delete it. Okay. So every day, if you keep this in here, and let's say I say I don't want to trade team right now, and then tomorrow morning I generate signals, and let's say team gets generated again, when I look at it, it's still going to show as that it's going to skip it because it's in my skip order list. Okay. So now what I'm going to do is I'm just going to accept the signals. Sorry, I don't think I saved that. So let me just, yeah. So I'm going to do that. Now, the other way I can get rid of it is I can just delete it here and resave it. Okay. So that's another way. If there's multiples, it'll look like something like this. Boom, boom. Order, update the list. See, it's comma separated. So if I want to delete the whole list, that's one way to do it, right? So now, okay, so now I've generated my signals, right? So every day, once this is set up, all I really need to do is generate my signals. Now, if something happens and it screws up, I can just force it again and just tell it to run the signals again. It doesn't matter how many times you run the signals, you cannot screw up. If it generates duplicates of the signals, if it runs duplicates of the signals through Alera, Alera's smart enough to know not to duplicate your orders in your brokerage account. So you don't have to worry about making stupid mistakes, okay, which is really important. So now I've generated my signals. Now the other thing I can do is I can just tell it to run. Now the other one thing I can do is just say, hey, I'm going to run this tomorrow at 9:10. You see this is blue. It's going to run it automatically and it's going to do this at 9:10. But for the sake of the demonstration, let's just force it to run. Okay. So now what I'm going to do is I'm just going to tell it to run my strategy. It's running it. Every strategy creates a strategy log so that you can see exactly that happened pretty quickly because it didn't take long to process it. But it's going to run a strategy log so that if something happens that you're wondering, like, why did it do this? Why did it not do that? You can go through the log and see, okay, it told me to buy to open team. Let's see, I'm changing the action from buy to open to long since the position did not originally belong to this strategy, but it has a higher priority, okay? So it knows what to do. If it skips a symbol, you can see why in the log, right? Now I only look at the log if I am wondering why didn't it do this or why didn't it do that. So the other thing it's going to do is you can see here, here's my portfolio now. I had nothing in my portfolio before. Now it's already bought 32 shares of team. The only reason it's done that is because Interactive Brokers doesn't really care about the accuracy of the paper trading account. Honestly, like if this was a live account, it would just stay in the market like MRVL is until the market opens tomorrow. So in fact, I can actually generate my signals and put them in the market tonight and just, let it do its thing tomorrow. It actually executed this trade just because it's a paper trading account. And, it's just for testing purposes. So they're not that concerned about how accurate the actual execution is. Okay. But you can see now this will show up in my portfolio. If it gets executed, it'll show you the gain. It'll show you some other stuff. Some of the data is goofy just because it's a paper trading account. But you can see it'll show you neutral if it's waiting to get filled. Right. And then the other thing it'll do is it'll tell you, now it won't do it yet, but it'll normally tell you what things were traded that day. So you can come over here and say, okay, what actually got executed? And it'll give you a list of what got executed. The other thing it'll do is it'll start to generate, based on your equity, it'll generate your equity curve compared to what the SPY is doing. Now, gang, I realize I'm 36 minutes over our normal meeting time, and I apologize for that. I'm almost ready to wrap this up and take some questions. So just bear with me a few more minutes, and I'll look at the questions soon as well. So let me show you, this is the RSI2 strategy, for example, that I run this in my live account, but I also run it in a paper trading account as well. And it's been trading in the paper trading account for 88 days. Oh, you know what? I'm actually running this RSI2 strategy because it's actually pulling the signals from my website. Okay, so if I look at that, so what this is telling me is that I've been trading it for 88 days. It has a return of 16.42% over the 88 days, right? Because it's looking at the daily P&L and the fluctuations. And it's plotting this blue line here. So here's my developing equity curve of my RSI2 strategy. And the orange curve is actually my SPY benchmark. So you can see I'm slightly outperforming the SPY ETF. Okay. So in a nutshell, gang, that's kind of how it works, right? We can run multiple strategies. We can set up our settings for each strategy. We can pull our signals directly from AmiBroker, or We can pull it from AmiBroker, or we can pull it from my website. So this is what it looks like when I pull a strategy from my website. So this is stored in a Google Drive file. When I click on this little folder, what it's doing is it's showing me what the buy and sell files are in the Google Drive folder, right? So I generate these signals. I automatically every day, they get sent to my website for the strategies that we offer. And then you can see the buy and sell sig files. And that's what it's going to execute. Now, you can see for my RSI2 strategy, it's a little more complicated, right? What this one does is it uses a buy to open. It uses limit prices that are good for the day. So it'll drop these in as limit orders in the morning. And if they get filled, they get filled. If they don't, well, then they're gone. And then what it does is it sells any stocks that need to be sold market on close. So we represent the data in two ways. On our website, you can see a list in a table. I'll just show you this really quickly, gang. Just really quickly, because I don't want to get off topic here. But if you go to our website, let me just log in, and we'll use that account. You got to answer this really skill testing question, really hard skill testing question. And then if we go under, here's a list of all of our strategies. So these are all the strategies that we offer. And there's a link. There's a link to each one, or you can access them like by category. So here's the free strategies. So I'll just do it that way just so you can kind of see. Here's the RSI2 strategy. So that functionality I just showed you in Alera Portfolio Manager, these are the exact same signals. So here's all the buy signals that got generated for, the signals were generated from the 4th, and they're good for the 5th, which was this morning, right? Here's all the sell signals that got generated. Now, this is exactly the same, but in a format that Alera Portfolio Manager can just pick up and use. Okay, so you can look at it visually, or you can, use it in an automated way directly through Alera Portfolio Manager. And gang, that's pretty much it. So every day, like what I do is I just let this run my strategies. I either run my strategies locally, or most of my strategies that I'm running come directly from my website, because I share all of my strategies with my community. And I just check to make sure that we've got valid signals for the day. And these are usually all just automated. So every day at 9 a.m. it's going to run all these signals automated. And I mean, literally the thing that I do in the morning is I come in the morning, I check to make sure IB Gateway's open. If it's not, I log in. I check to make sure this is running. If it's not connected, I click this button here. I connect it. I look at a couple of my strategies. I make sure that it's pulling signals. I make sure that the dates match up. Yep. Okay. So this was 17 hours ago in the morning because they're generated at 4:30. It'll say, generated 4 hours ago. I look at the dates. Yep. Today's the date. It's going to use the signals from the day before. Okay. This strategy. Here's Gary's mountain trading strategy, which is in TLT right now. So I just look to see, and essentially that's it. So that's it. So then when the market opens, what it'll do is it'll automatically just take all of my trades. I don't even like sort my strategies anymore. Like I don't come in here anymore and say, well, do I want to trade this? Do I want to trade that? No, I trust my strategies now. I take every signal that my strategy offers. But if I didn't, I could still pick and choose which signals I want to trade. So gang, in a nutshell, that's how it works. Let me just put the slide deck up. So we reviewed all of this information. Okay, I showed you how to run the automation in Alera Portfolio Manager. So we put it all together using Alera Portfolio Manager. We did a live demo working with an AmiBroker strategy. So gang, if you want to test drive this yourself, here's a link that describes how the process works. You can go ahead and do that. And you can also test drive a couple of free strategies. If you sign up at Systematic Investors Group for a free account, excuse me, you can get access to the RSI2 strategy and the supercharged momentum strategy. Both of them are pro strategies. I'm actually trading them both with real money and have been doing so for many months. And you can actually just set it up. There's some videos here that shows you how to set up the signals using the Google Drive implementation. So if you're not ready yet to generate signals using AmiBroker for your own strategies, you can just try a couple of ours. Okay. So if you want to find out how, just visit the link, sign up for a free account. You can get a free instance. It'll explain how to get a free paper trading instance of Alera Portfolio Manager, which is super cool. And then what you can do if you want to try it, you can try it using our strategies. And then you can also set up some strategies once you're comfortable developing your own strategies using the templates and the tools that I've given you tonight, to run those using AmiBroker as well. And you can, pull some strategies locally, and you can pull some signals locally and pull some signals from our website to see the range of things that you can do. So what I'm going to do, gang, is I'm going to take questions in a second. But I've got a blog post that kind of summarizes this process too, but it has links to all the helper files you're going to need. And I'm going to send that out with the recording tomorrow, so you'll have all of that. So just a quick note, as you dive deeper into systematic trading, you're going to find that the benefits of combining multiple strategies is super powerful. Okay. The benefits of combining multiple strategies, it's super powerful. So with AmiBroker and APM or Alera Portfolio Manager, you'll be able to run as many strategies as you want in order to diversify your risk and your trading opportunities. You can combine a few strategies to complement each other, reduce overall drawdowns, and smooth out your entire equity curve. And as you've seen, it's once you do it once, it's not that complicated, right? If you have the proper templates and the education and the structure, right? It's all about the framework. So this is the power of using systematic investing and combining multiple rules-based strategies. This has been a game changer for me, gang. If I wasn't doing this today, I would not be trading, and you wouldn't be hearing anything from me today. Okay. So thank you. If you have any questions, I'm going to check the questions now. I apologize. We really went over time. And let me just pull up the chat box. And here's some information if you want to join us for a couple of weeks, get access to our education, everything else. You can use this code, and for 2 weeks, you can get a trial of everything we do for $14.99. But you don't even need to do that yet. You can just try it for free, set up a free account, access a couple free strategies, follow this process here, how it works. And you can get a free instance of 2 strategies and a free instance of Alera Portfolio Manager until you're comfortable to take the next step. Okay, so gang, I apologize. I ignored a lot of the questions. Let me just kind of back up and see if I can figure out where we left off. Let's see. Okay, so Wayne says using section begin and section end on your parameters allows you to hide section on parameter windows if you have a lot of parameters to deal with. Yes, absolutely. So let's see. So when a buy or sell signal is generated, is the trade executed at the time or is an alert sent? Yep. So the trade is executed when you send the orders to the market, generally before the market opens. So you can send them at the end of the day, or you can send them in the morning like I do. I send my signals at about between 9 and 9:10 a.m. Eastern time. Okay, so we answered that. Does AmiBroker exploration output format to the Alera signal file? Yes, we answered that. So Wayne says use the say batch command to have it tell you it is running, although it can make for a very alarmed better half if you are with her and there is someone talking in the house. Okay, I'll have to take a look at that, Wayne. Thanks for that. Okay, so very straightforward with the batch file. Okay, I'm glad to see that. Blair says, nice work, have to go. We'll catch the rest when you post it. Great, thank you, Blair. I know you're gone now. CSTA meeting next week. We'll send out the details later. Great. So stay tuned for that, gang. There should be a good CSTA meeting next week on Wednesday. And we have a meeting on Tuesday with Dr. Howard Bandy. Okay, so done well thus far. Yes, Rick says. Great. Let's see. Wayne says totally cool. Alera runs AmiBroker. Yep. Alera will call AmiBroker. It'll call Python. It'll basically call any program that you want to use to generate signals. You can even actually generate signals from, the FinViz website. You can scrape data. We've got some people in our community that are scraping signal data from other sites, from other systematic traders that don't want to make their signals available in a format that Alera can use. So what they do is they call a Python script that actually scrapes the data from that daily, like kind of like the strategy scan I showed you with the live signals, and they can actually run those signals directly in Alera Portfolio Manager and have it manage it, which is really cool. I know some of our members are doing that. I actually haven't spent the time to do that, but maybe one day I'll get one of the gang on to show you guys how to do that. Let's see. Ivor says, just going back a bit, when you write your code, do you ever execute your buys and sells from within the low-level CBT? Yes. So the RSI2 strategy that we use, that I showed you briefly, uses a CBT for generating some of the code. So actually, if you actually join our website, we have a course. I haven't really pushed the course because I'm showing you guys how to do this, but I actually have like a 4 or 5 hour course that goes through the entire process of how to do this. And we give you like 3 or 4 actually good working strategy code examples other than the one I'm giving you today. This one is actually a new one that I developed for Doug to show him the whole process as well and to validate his strategy. But there's, it has like three or 4 examples. One of them has a CBT example, and the course is called Trading and Investing Automation for AmiBroker. It's part of our offering. So that elaborates how to do this whole process and gives you some other code examples. So for example, if you wanted to use limit orders and you wanted to use a CBT, it has the structure template in place for that. Okay, so Ebert Mahan, Ebert says, love what I'm seeing. Great detail. Thanks. You're quite welcome. Stephen says, Dave, many thanks. Excellent presentation insight. You're quite welcome, Stephen. Let's see. Ebert asks, is Interactive Brokers the only broker Alera connects to? So right now, it's the only stockbroker it connects to. You can actually trade FX through Interactive Brokers. You can trade the Australian market, the UK market. You can trade some other markets through Interactive Brokers, and it also has cryptos which are supported through Binance. And I think there might be another broker there. I don't remember. But they are adding other brokers. If you have a broker suggestion, you can always send it in, and we will, we'll see if that can, they can get that done for you. I can talk to Alex over at Alera. Now, Alex did a presentation with us a couple months ago. If you're interested in that, let me know. I can send you the link to that as well. Or if you just poke around in our on our website in our blog section, you'll find a couple of blogs back a link to a video presentation of some of the things that Alera Portfolio Manager can do that I just couldn't expand on in this presentation. Okay, excellent presentation. Wow, thanks so much for this. You're quite welcome, Ebert. I want to get you guys, you spend a lot of time working on your strategies. I want to help you guys implement your strategies. That's what we're here for. Graham says, thank you for your excellent presentation and generous offer to share. You're quite welcome, Graham. You've done the same for our group as well in the past. So I appreciate you as well. Briefly, how is Alera updated to most recent version? So if you follow this link here, how it works, it will take you to a link on Alera's site. And what they do is they just post, whenever they have an update, they will post it in their forum. And you can see it easily, and then you just install the new version, and it will save all of your what do you call these? Your workplace settings, your um, uh, basically all of your strategy settings and all of um, your workspaces. Sorry, your workspaces. It'll save all of those and it'll just install the new version. So it's quite. I actually just updated to 3.1.9 a couple of days ago. It's quite easy. Okay, so let's see. Ebert says the version of AmiBroker is a professional version. Yes, I'm using the professional version. Tony says, thank you so much for this, Dave. Excellent. You're welcome, Tony. Let's see. So in order to reproduce a back-tested strategy, one should not use most of the Alera input parameters, but have AmiBroker provide those parameters. Yeah, so AmiBroker is what does all of your R&D. It does all of your, AmiBroker does all of your strategy testing, development, signal generation. And then once you're done all of that, then basically all you really want Alera Portfolio Manager to do is to call AmiBroker, tell it to give it the signals that it wants, and process those signals and manage the portfolio. So if you think about it, AmiBroker, and I mean AmiBroker could be Python, it could be anything you can use to research and develop strategies and generate signals, right? AmiBroker just happens to be our platform of choice. But in AmiBroker, you do all of your R&D, you do all of your signal generation. So think of it as like all of your R&D, signal generation, validation, quantification, and then Alera Portfolio Manager does all of the, grabbing all the signals, managing the portfolio, managing the position sizing, number of positions, stops, targets. It basically manages all of the actual real world execution and portfolio management of your strategy. So I hope that helps. Doug says, Dave, great presentation, much appreciated. Doug, you inspired me to do this, so thank you as well, and you're quite welcome. Wayne says, great presentation. Thank you. You're welcome, Wayne. Bazi, hi, Bazi, says, Dave, thanks for very informative presentation. You're quite welcome. Let's see, Dave, do you delay sending your orders to just before opening so that the market makers don't have time to know where your entries are? No, what I do is I use the market on open or market on close auction process. So what happens there is you send your order in as a market on open or a market on close order. You have to have it in the market, depending on the market you're trading, but safely, I think you have to have it like at least 15 minutes in before the market opens or closes. And then it goes into the matching, the opening or closing auction process order matching system. You can read a bit about that online, but what that does is whatever the settlement price is for the open and the close of the day that you see on your chart, that is the price that you're going to get executed at with no slippage. So it's a very good method for systematic traders to use. And that's why you see a lot of like a volume at the beginning of the day and the end of the day on an intraday chart, because a lot of the volume, not only for people that are opening and closing trades, but a lot of that volume is coming in from the opening and closing auction process. And that ensures that you get a good match and a good fill with no slippage. So a lot of the strategies you develop, you can actually, if you just want to, match it up to your backtest well, give it a 1-day trade delay. So you've generated your signals, and then the next day you've executed your signals on the open, and that will line up very well with what your real world trading will do. It's really a godsend for systematic traders, and it's a good way to know that you haven't it'll match up to your back test, so that you know that in your back test you haven't introduced logical errors or look forward biases into your strategy that will make it look like your strategy will perform a lot better than it normally would. So I hope that helps. Nick says, thank you. I got some good pointers from watching your presentation. Great, Nick. Thank you. Marcel says, excellent presentation. I know Alera works for the US and Australian markets. Will it work for other markets as well? The markets that it supports, it will. I know it supports the UK. If you have a specific market that you want it to support, just let us know, and we can talk to the gang over at Alera Trading, and they will, prioritize based on demand. Okay, UK is good. I'll try that. Yeah. So I don't know if I think you can probably trade the Singapore market through interactive brokers. So any markets that you can trade, it will, if the gang at Alera implements it, it'll become available. They can do that fairly in a reasonable amount of time. So technically, it can trade the TSX, but, and this is the caveat. So the organization that controls the decision making in Canada, I believe it's the OSC, has basically asked interactive brokers to turn off their API trading, so that interactive brokers will not allow trading through their API or any systematic trading. So technically, Alera Portfolio Manager can do it, but because of the regulations and the pressure that our governing body, I believe it's the OSC, and I could be wrong about that, but it's one of those organizations that regulates in Canada. They do not allow programmatic trading on the TSX in the Canadian market, unfortunately. Hopefully that'll change, at some point. So Graham says, as far as I know, MOO and MOC orders are not available on Australian market. That's quite possible. Now, just as a side note, for my own trading, I only trade the US markets, and the reason why I do is because they have the proper infrastructure, they have the liquidity, all of the strategies that we offer to our members through Systematic Investors Group. I'm not concerned if we get, several hundred members at some point, which would be great. I'm not concerned that, any small community of traders is going to affect the liquidity to any degree that it's going to make those strategies untradeable. So we don't trade, low volume stocks. We only trade stocks that make it into the major indices, and we do that for a reason, because we want there to be enough liquidity, so that there's not a lot of slippage and a lot of goofing around that goes on in those stocks. So I hope that makes sense. But yeah, those certain order types are not available for every market, and I think you're correct, Graham. Thanks for that observation. So gang, we're way over our time limit here. We've still got 20. So we've got 24 members and enthusiasts, systematic enthusiasts on the meeting still. So what I'll do is, if there's no other questions, gang, I will thank you very much for your attention and your participation. I'm willing to stick around for a few more minutes if there are any other questions. I'll wait for just a minute, and then I'll just thank you very much, and I will shut this meeting down. And then what I'll do in the next day or two is I'll send out a recording of this meeting to everyone that attended, into all of my lists. And I'll also send out a couple of blog articles within that email that will give you the information you need. Like, for example, you'll be able to download through the links in the blog article that I create for the auto trading and systematic trading, this presentation. You'll be able to download all of the files that you need. You'll be able to watch the recording, and you'll be able to see the summary. So I hope, those different formats and venues will be helpful for you. Again, as I mentioned, we do have a full course available for trading and investing automation with AmiBroker. It's part of our full offering, so you can check that out as well. Just a side note, if you become a full member of our site, you get 1 year access to Alera Portfolio Manager included, as well as access to all the education and all of the signals for all of the strategies that we provide on our site. We're developing new strategies all the time. They usually go through a process of being introduced as beta, and then they move over to pro strategies. So while they're beta strategies, you can actually access them and look at the signals, and play around with them, paper trade them until they move over to pro. Then you need to be a full member. But we do have 2 free strategies that we keep free, and I actually trade them with real money, even though they're offered as free strategies. I like them. I've been making some money with them. So as far as that goes, they're pro strategies. Oh, the other thing I wanted to mention is all the strategies that we provide. You can see updated backtests. They get updated automatically once a week. So on the close of every week, you can see the updated backtest results. So if you're interested, I'll just give you a really, really quick tour here. The easiest way to look at all our strategies is to go to all strategies available. It'll show you the strategy spectrum. So we're going to develop strategies that fit this entire spectrum. Right now, the strategies that we have are reversion to the mean. We've got a momentum strategy. We've got a short-term trend following, and we've got some volatility strategies. So you can see which ones these are. Now this I updated manually. I have to update this table manually, unfortunately. So I just looked at all the results as of December the 25th, and I updated these values. These are the average annual returns. Here are the risk-adjusted returns. Here are the maximum drawdowns. So maximum drawdown can be fairly misleading. Like, for example, I trade the RSI2 strategy. It looks like the drawdown is big, but if you actually look at the backtest report, which I'll show you in a second, it was one event that happened back in 2000, right? So if you click on this link here, this will take you to the daily strategy signals, which is this, the visual. This will take you to the backtest results, which get updated once a week. So you can see what the assumptions are, the statistics. You can see the charts, right? And then you can see the profit table. So this gets updated on the close of every week. Every one of these back tests gets updated every week on Saturday after the close. So the other thing you can see is what access level is required. So the RSI2 is a free member strategy, supercharged momentum trend free member. The other ones are pro. And then we have one of Gary B's strategies, the NDX momentum strategy, which is really good, has really good results. It is actually it's in a cash equivalent. It's in the TLT right now. And I think it spends about half of its time in the TLT, and the other half it spends in the NASDAQ 100 and some of the top stocks there. If you want to learn more about his strategy, you can just go to Mountain Trading, and that will take you over to a bunch of information about how his strategy works. And you can subscribe to his signals here. Yeah, so that's basically it, gang. If you want to see how this all works, check out this video I made. I spent a little bit of time making a cool video on the front that just gives like a 5-minute primer. And it will show you, why you want to invest in systematic trading. I mean, I think the best thing that I can say, Marcel actually helped me come up with this, and thanks for that, Marcel, is, with systematic investing, you can more than double the average returns of the market, over just a normal portfolio, a diversified portfolio, or just owning some ETFs. So you can more than double the average returns with less than half of the risk of loss, the risk and the loss. And you can do that all within a few minutes a day. So that's really, that's really why you want a systematic trade. But if you want to see how our process works, just click on how it works. And this will take you through a couple of steps that have, a little bit of description in a video in each step. So if you want to get the kind of the overview of how everything works, this is kind of the way to do it. Okay, gang. So I don't see any other questions coming through. I appreciate your sticking with us till the end. And I'll look forward to seeing you next week at Dr. Howard Bandy's machine learning presentation, Transition to Machine Learning for Trading. Gang, again, thanks so much for sticking with me. You could have been anywhere tonight. You chose to be with me, with us, and I appreciate it. So thank you very much. I'm going to shut the meeting down now.